Hello guys, welcome once again. All right, so in this video we're going to do a top-down analysis on GBPUSD. I'm going to show you how to analyze your chart properly using wave concepts, doing a top-down analysis on great British pounds. All right, so the first thing you need to do when you want to do a top-down analysis on any pair is to start from a higher time frame. Now, this higher time frame is relative based on the kind of trader you are. Like, for instance, if you want to be a swing trader, we expect you to start from monthly time frame. If you're a day trader, there's no need coming to monthly time. You can start from 4 hour time frame, then you scale down to 5 minutes. Okay, so that's just the basic way we do it. So when you come to your monthly time frame, this is what we can see, guys. All right, on the great pound. Okay, so this gives us a clue on what the market have done in the past. All right, so if I should like look at what has happened here, you can see we have an impulse correction, impulse correction, impulse, which is a 5 standard move corrective phase. So for us, this corrective phase is over, so we'll be expecting more action on this positive side. But although some persons might like, okay, what actually must have happened here? There is a way you can actually tell the historical charts, from 1980 to date. So, and the way you can see all the charts of great pounds is to go to, like, there's a site called the FX Top. Let me show you guys FX Top charts. Okay guys, so this is the FS Top site, fstop.com. You can just go to historical chart and just type the pounds against dollar. You will get this kind of chart. So this chart tells you what has happened in the past. As you can see from here, guys, that the market has actually given us this impulse down, corrective move, and move down to break this low. Okay, and from here the market is expected to keep pushing high. So this just gives you the historical preview of what has happened in the past. You might not necessarily need this for anything, but just for in case you want to know exactly what the market has done. But believe you me, this helps sometimes. Like last year, 2 years ago, where the market was here, we know that, okay, there's no how this market will start pushing up except it breaks this low, and that was why many traders positioned themselves here, because and the market tagged this low and keep pushing back up. All right, so that's just how to get the historical view of what has happened in the past. So let's go back to trading view now. All right, so from here, so the first thing is for you to, there are two things we're identifying here, guys. We're identifying the trend and we're identifying patterns. Okay, pay attention to that clearly. We're identifying trends and we're identifying patterns. Okay, and you know the rules for a trend, that the low must be broken or the high must be broken. Okay, higher highs and lower lows. Right, so the first thing we do here is to put our trend line here, because the trend has been established. And always remember this rule, we use the last two impulses, guys. Okay, in case you've not watched our video on trend, kindly go there. You understand the basic rules on drawing trend lines. So these are our last two impulses, because we have these many impulses coming down: first impulse, second impulse, third impulse. So these are the last two impulses that we use here, and we draw a trend line on that. So from here now, you can now zoom in to see, can you see any pattern that you recognize here? Is there any pattern you can recognize here? All right, so the answer is yes. There is a pattern we can recognize, and we have seen the pattern here. This is we have this. So this is the first thing, basic thing for you to do in any time frame you are in: identify the trend and identify pattern. So we have seen this pattern we recognize, and this pattern is what we call the running flat. And also there's another trend. The another trend is that we have seen this impulse here, a pattern form as a corrective phase, another impulse, and this impulse has actually broken this high. So that's also a trend that we have seen also. So we also need to put our trend line here. Okay, this is how to do a top-down analysis for you to know exactly where you are in the bigger picture. So this is our second trend. So what do we expect? Okay, what do we expect? So we're expecting the market, since it has confirmed the trend in a monthly time frame, to keep pushing high. But before then, there will be a consolidation and other. So let's go down to weekly chart now to see what exactly the market is doing. So in the weekly chart, what can you see here? All right, so the market actually is just going trending, it's trending. All right, because we've seen that this impulse has been broken and is still going up. But looking at the whole thing, can you see any other pattern that you've not seen in the monthly chart? Okay, looking at it, the obvious pattern that we can see here is this one that has happened, but we don't need this for anything, guys. Our full attention is here because ability for us to interpret what happens here will help us to make money or lose money, so that's why we are focusing our attention on these last impulses, guys. So that's why, all right, looking at the weekly chart, guys, there's nothing too clear for us here. The only thing that is clear now is we have the trend that is going up. The market is just trending here, and we can draw this trend line to be these points. All right, that's the only thing we can see on this. All right, and before I forget, there is always a projection for every impulses. Okay, so and that is one thing you should pay attention to. Like, if you measure this first impulse in the monthly time, which is this, we measure this first impulse here. What are we expecting? We are projecting that this market we definitely come to this point. Okay, so we should have this in back of our mind. All right, so what we measure this wave, we saw this correction, so we're expecting this next impulse to come to this point, but it's not there yet. So that gives us a clue on where we're expecting the market to get to first. All right, so let's have that in back of our mind. We now go down to daily chart. Okay, look, going to daily chart, guys, what can you see? All right, so the only thing we see here that the market has broken this trend. One rule you should never forget in analyzing your charts, that anytime a trend is broken, the whole move becomes a mono wave. We did that last time. All right, so this is a mono wave for us now. So this trend has been broken and it has broken this structure. So what are we expecting? We should be expecting that the market, confirm what it's going to do here, drop again before it keep pushing high. So something like this we'll be expecting from the daily chart. Okay, so that gives us a clue. Then you go down to what? 4 hours chart. So coming to 4 hours chart, guys. All right, now the only trend we saw on the daily, which is also here, is this trend. So let's put down trend line here because this is a permanent trend that is valid. Okay, so we saw this trend that is valid. Now, why many traders that are taking trend break line are being smashed by the market? Because they don't understand the concepts of wave. Now, let me ask you a question. Looking at what the market have done in the past, okay, from where it's coming from, right? All this move here, and just looking at this small correction here, do you think this correction is strong enough to correct this big move? And the answer is no. So that's why this trend break to me does not actually make sense, because the corrective phase should be more in terms of time span than the impulsive phase. So that's why this part will still be part of the correction that's complete this move by the time everything completes. That's why you need to still pay attention to more of the complex structure that's going to form here. So the only thing we can identify here is that this trend is broken and the market is just in between this place. So let's go down to 1 hour. So on the 1 hour chart, guys, what then can you see? All right, so here we have another trend. Okay, we have another trend that is has formed here. You can see the impulse correction, impulse correction, impulse, which is a 5 textbook clear trend. Okay, so permit me to put a trend line here. So this is a trend on its own, and this is a correction that is forming. Okay, so this correction now, what we can see here from all indication, what we want the market at least to drop to this point, 0.618 move of this. So let's measure it. Okay, so the 0.618 is here. All right, so this is what you are measuring. What we expect the market to do is first to come to this point, because this is an impulse on its own. So we want this correction to finish up and come to this point. Then from here, then that might give us impulse, correction, impulse, correction, impulse, then it moves up again. So, and also from complex angle, it makes sense. So we are expecting the market to come to this point at least before it keep pushing high, based on all indication that once the market comes here, it will now be pointing us to the bullish side which the monthly is bullish, the weekly is bullish, the 4 hours also is bullish, and the 1 hour comes here, then you'll be able to be confident in taking that trade, because you know from here the market will keep pushing high. For some of us that are day traders, you can still narrow it down. Let's go down to 15 minutes. You can see this is what they call the fractal nature of the market. All right, we have this trend that is coming down here. All right, so this is an impulse of its own. This is a correction. All this is an impulse on its own. I believe this impulse is completed, guys. So the next phase of this market is the market will come up here, give us another correction here. So this will be a quick buy for scalpers or for day traders. The market will come up to this point, right? And then it drops. Okay, so from here it will drop to that 618 of the 1 hour, and from there you'll be able to take that buy that we align with the overall time frame for that great swing. Okay, so that is how we do a top-down analysis. All right, so I didn't label the patterns here on the smaller time frame, because labeling all this thing might clutter your chart and it messed up the whole thing. Now if you want to learn this concept, if you want to learn how to do it yourself and trade strategically, trade with confidence, I'll be glad to help you in this journey. All right, so kindly smash that like button, subscribe to this channel, and follow for more. Thank you. Don't forget to join our Telegram group. See you in the next